All right. Good afternoon, everybody. This is Lisa Sharrard, and I'm here to talk to you about flood insurance and FEMA's new program called Risk Rating 2.0. I want to welcome everybody as we get started this afternoon. If you have any questions, please enter them in the Q&A or the chat, and we'll be happy to answer those questions for you. Again, my name is Lisa Sharrard, and I'm the owner of Choice Flood Insurance. We also have a consulting business called US Flood Solutions. We're able to help you guys with any of your real estate transactions that either you need consulting work or flood insurance for. But as we go through this webinar today, we're going to be talking about FEMA's changes, the National Flood Insurance Program. Look about the NFIP reauthorization. You know, Congress is difficult in getting anything passed right now. We do have a reauthorization, temporary reauthorization through February 22, 2022. We've had 18 short-term extensions since 2017. And for those of you who remember, this is the 10-year anniversary of Biggert Waters. It was passed in 2012. Flood Insurance Act 2012, and that 10 years ago is when the realtors really started paying attention to flood insurance. Flood insurance was a big deal back then because the way the act read that structures went to full risk rate at the time of sale, and we were seeing some pretty wild rates for flood insurance at the time. So we're good for short-term extensions until 2022, February 2022. Give you an update on the maps. Horry County just came out with new maps effective December 16th, 2021. So you need to please update your listings to reflect the new flood zone and whether or not flood insurance is required. I got to tell you, I processed a endorsement yesterday for a gentleman who was in a VE flood zone under the old map, and in December 2016, December 16, 2021, he went to an X zone. So his insurance went down from $7,500 to $660. Big deal. So to give you an overview, there's about 7% of the policies are affected. We had 11,000 structures that were removed from the flood hazard area altogether. And 7,200 that were moved in. So that's there's 7,200 people who will be getting letters from their mortgage companies asking them to buy a flood insurance policy. So with map changes, we can have several things that can occur. You can either have no change, you can change from a low to a moderate flood zone, which would be zone that says BCX. You can change from a low risk to a high risk. Or you can move within a zone from an A to a B. You can, there's a new area called a limited wave action, LIMWA, that's a coastal A zone, and that's more for floodplain management construction purposes, but that is shown on the map. And it could be a change in the base flood elevation or a change in the vertical datum. So again, please recheck your listings to make sure that the information is accurate if you did your research or before December 16th, 2021. So FEMA's come up with this way to basically make flood insurance more fair. Under the legacy system, if you lived in a house that was built in 1930, you would pay the same rates for someone who built a house in 1999 or 2021. Square footages are different, cost of materials were different, the construction methods were different, and just a lot of different variables. So FEMA looked at this and said, we really got to look at, the average square foot of a house in 1950 was about 1,000 square feet. But in 2000, the average square foot is 2,200 square feet. So really there was an inequity in the way FEMA was pricing their rates. The other inequity occurred, whether or not you were in the Midwest or the coast, everybody paid the same rates. The frequency of event you might have, everybody paid the same rates. So it made it very difficult for FEMA to to justify the rates over time as new construction came in. So they came up with this risk rating 2.0 to provide some equity in those deliverable of the rates. So what's changing? FEMA is trying to eliminate the complexity of the program and make it more simple for insurance agents to write flood insurance. So they've eliminated the need for elevation certificates. They have simplified the premium discount rules. They've increased their investment in mitigation by expanding mitigation credits, expanding CRS. They're addressing the inequities by leveraging additional information, and we'll go into a little bit about what that means, reflecting prior claims and factoring in the cost to rebuild. So this all began October 1st, 2021 for new policies. So we're really right now running two systems at the same time. We've got the legacy rating system for those policies that were either new business or renewed prior to October 1st, 2021. And then the renewals will be impacted beginning April 1st. So we're going to have the legacy system continuing for a while until those renewal bills hit after April 1, 2022. So FEMA in the past basically looked at, under the legacy system, looked at rating variables such as the flood map, the zone, the base flood elevation, the foundation type, and the elevation of the structure in relationship to the 1% chance flood. And that was it. All the information was sourced by FEMA, and there was no additional data provided. Under risk rating 2.0, FEMA has some of their information that they utilize, but they bring in additional data sources, and we'll go into what those are. They also look at replacement cost value. They're looking at rating variables that would include distance to the coast, ocean, or river. How far are you from the water source that they see as the primary source of flooding? What is the ground elevation, the first floor height, the construction type? And they're looking at a broader range of flood frequencies other than that 1% chance flood. So under the current rating methodology, the legacy, I'll call it, the maximum single family premium price would be $45,925. I actually have a client I'm working with right now who is paying $40,000 for her flood insurance a year for a single family home that was built in the 1940s. Under risk rating 2.0, the maximum would be $12,125. That would be the maximum that you would see. Now, we talk about replacement cost value because that is a factor in the rating system now. Replacement cost value, as you realtors well know, is not market value. Replacement cost value is what would it cost to rebuild that the entire structure like new with no depreciation whatsoever. And the market value, of course, is what someone's willing to pay for it. These are the factors that go into rating and influence replacement cost value. It's going to be your zip code, the square footage, the number of floors in the building, the total number of units in the building, and the date of construction. Those are the 5 factors that will impact replacement cost value. So FEMA has partnered with other people to help feed information into risk rating 2.0. They've partnered with USGS, NOAA, U.S. Army Corps of Engineers, Cat Risk, other CoreLogic, Milliman, to help them with the data that they need to develop the rates. So before, the rates would change every October or April. You could, feed the rates. We knew what the rate changes were going to be. Now the rates can change on a daily basis, depending upon when the data sets are updated by the carriers. That's a little bit of a problem for us. Our quotes are good for 90 days. But that is a challenge for us because we can quote something today and go back and quote the same structure tomorrow and have a different rate. We can go back and get the previous rate that we had quoted. The rates are again good for 90 days, the quotes. So in South Carolina, we have about 208,000 policies. 1.7 million in coverage. We have $27,100 is the average claim payout in the last 10 years. And then the average individual assistance payout in the last 10 years has been $3,600. So what does this mean? This means that if you don't have flood insurance, the most you're going to get if you qualify is going to be $3,600. So a lot of people who don't have flood insurance struggle with recovery, and flood insurance is the only thing intended to make you whole after an event. But this just kind of gives you basically where our highest coverage areas are in South Carolina. And of course, it's going to be along the coast. Risk rating 2.0, but there are about 53,000 policies, or 26% of our policy base in South Carolina of that 207,000. They're going to see an immediate decrease. You're going to have anywhere between you're going to have 65% or 137,000 see anywhere between a $0 to $10 increase per month, or $120 a year. And then 9% are going to see over $10 a month a year increase in their flood insurance. And that's about 13,000 policies. So there are some policies that are going to go higher. And that's because of the variables changing. Now we have statutory caps in place. Those statutory caps are in place for a reason. That means if you currently have flood insurance, you're not going to see an increase more than 15 to 18% for primary, or 25% for non-primary business, et cetera, or substantial repetitive loss, severe repetitive loss. So if you look in South Carolina, we have about 19,000 pre-firm subsidized policies. Those are going to continue to be eased into risk rating 2.0. Preferred risk policies are being done away with, and so you're going to be transitioned into risk rating 2.0. So about 63,000 policies. Your newly mapped, about 2,000 of those will be transitioned into risk rating 2.0. Your high risk areas, about 2,300 policies there. And then your full risk rate, you have about 122,000 there. So all of these policies, really the categories we're talking about are the ones that are to the right of the circle. Your pre-firm subsidized, your preferred risk, and your newly mapped are all going to be transitioned into the new rating system over a period of time. They're on a glide path. So this is what the new deck page looks like. And this is kind of an interesting, it gives you a lot of information here. Number one, it gives you the current flood zone. If you notice, you don't see anywhere on here the base flood elevation. So the base flood elevation is not on the new deck page. You have the data construction. It tells you, what kind of foundation it has and how many floors. You'll see your current flood zone. Next, you're going to see the first floor height method, and it says FEMA determined. So while we no longer are required to have an elevation certificate, it would be helpful if we did, because maybe that first floor height is not 1.0. So we either need an elevation certificate completed by a surveyor or engineer in South Carolina, or you can fill out section E on the elevation certificate, and the homeowner could do that, or the seller or their representative. But that would not need to have a licensed professional to do it. Section E is a little tricky to figure out because it says to go above or below, and it's a little confusing. And FEMA is working to come up with something a little bit simpler. However, right now it's very confusing for them to try and figure out. So if you have an elevation certificate, while we don't need it to rate the policy, it may help. So this tells us that they use their background data provided by their vendors to determine the first floor height. And here they said it's a foot off the ground. They have say here, it says prior claims equals 0. Do not rely on this as the final authority. What you're looking at is a policy that could be a severe repetitive loss. So if the policy number begins with RL at the top of the page, then you know it's going to be a repetitive loss property. But if it says prior claim 0, don't take that as the gospel. There's a way, and I'll share with you later, for you to get that data, or for the property owner to get that data. But again, it's going to tell you what the prior claims here are, but this is not always accurate. I had a severe repetitive loss property that had 4 prior claims, but when I generated the deck page, it said 0. And it said 0 because they had 2 repetitive loss numbers assigned to that one structure. So again, this information needs to be verified with the seller and with FEMA. So you're going to see here, you've got mitigation discounts now. That's something new that's on there. We had our building premium, our contents premium, our increased cost of compliance premium, our mitigation discount, our CRS discount, and now you also are going to see the full rate, risk rate premium, the full risk premium. So this is what they're going to pay less their discounts. You're also going to see here that you have a federal policy fee, your HFIA surcharge. Of course, this one here is a non-primary because you see the $250 surcharge there. Your probation surcharge is going to tell you what the total annual premium will be, the prorated premium adjustment is, and then the adjusted annual premium. And this one is rated at full risk rate. So this is a good example of what the new deck page looks like. And you can see here that this is an example of one I did recently along the coast at Rachel Beach. It was built 4 feet above the base flood elevation. They're currently paying around $300 for their flood insurance. And they're going to be subject to that 15% annual increase. But eventually, this is what their rate would be, around $1,000. They're not oceanfront, but they are subject to tidal flooding. And this is a structure that was renovated and brought into full compliance. So, but you're looking around $1,000 a year. Homeowner wasn't too disappointed with that. We get mitigation discounts up to 5% for proper openings. The appliances have to be located above the first floor. Mechanical have to be has to be elevated above the first floor. So if you have a single family slab on grade structure, then the mechanical equipment would have to be in the attic to get the credit. Newly mapped, you're going to get a mitigation discount there, just because that's statutory. You'll have your CRS discount and you'll have your optional deductibles. Now, I will say the optional deductibles do not provide the discount that they used to. So where you would see a $3,000 or $4,000 decrease with a $10,000 deductible, you're not going to see that anymore. So we talked about grandfathering. Grandfathering is going away under the new price methodology. So for example, structure number 1 will no longer receive grandfather rates once it transitions into the new pricing methodology. However, we've gone a glide path between 15 and 18% to get them to full risk rate. Structure number 2 and 3 are now subject to pricing, the new pricing methodology. And they don't experience any change if the zone changes or the VFE changes. And of course, structure number 3 is new business, and that would go straight to full risk rate. Now, one of the interesting things about risk rating 2.0 is, let's say we buy flood insurance. We're buying a house, and the homeowner will not give up their flood insurance policy deck page, so we could do maybe an assignment. Assignments are no longer necessary as they used to be, because what we can do now is we can get the assignment, if we just have the policy number and who the carrier was, then we can apply that premium with a 15% increase up to 11 months back, which is amazing. So if you bought a house within the last 365 days, we can go back and we can kind of claw back that old premium that the seller had within the last 365 days. There is a 30-day wait for new business without a mortgage transaction. So it's really important that we have that done and effective, initiate the process and pay the premium 11 months prior, after closing, because with that 30-day wait, it takes us beyond the 365 days. Bambi has a question: is the first floor height measured from the ground or sea level? So the first floor height is going to be measured from the ground. So you would just use a tape measure to measure up to the top of the floor. In an A zone or a VE zone, it would be the bottom of the lowest horizontal structural member. Good question. So, going back to that one. Let's see. Sorry about that. All right, rate comparison. So for a structure that was built in 1986 in a VE flood zone, we have a slab, 3 floors. The premium was $474 with full coverage. That's $250,000 in building coverage and $5,000 deductible with $100,000 in contents coverage. The replacement cost value on the structure, which is now a factor, is $395,593. The premium would be $893, and that's for full coverage with a $5,000 deductible. That's not a bad deal. You're on a glide path from the 474 to the 893. So you're not going to be hit with that 893 at renewal. You're on that glide path, provided there's been no break in coverage. So what's not changing? Statutory caps remain in place. So that's 15 to 18% for most policies. It's 25% for severe repetitive loss, for businesses, and for non-residential. You have the premium discounts you can get. That's not going to change for newly mapped. Mitigation discounts, CRS. Policy transfers, you can still transfer policies and discounts to new homeowners, but you don't have to do that. Right now, we can do that with the new business. If they purchased within the last 365 days, we just need a copy of the closing documents. The HUD form for underwriting. So once property closes, send us the HUD form and we can honor the premium that the prior owner had, plus a little bit of a bump up. Excuse me. And then the availability of premium discounts for CRS, that's not changing. Use of the flood insurance rate maps for mandatory purchase and floodplain management, that's not changing. So the lenders are still going to require flood insurance based on what's on the map. It's just our rates are not going to be tied to a zone any longer. So what am I seeing? The overall impacts, the Linois, the coastal A zone, that's not factored into rating yet. That's on the map. That's where you have a 1.5 to 3 foot wave on the new maps. Severe repetitive loss properties, man, I am seeing rates drop down. What's going on with that? So if you have properties that have currently paying $10,000 a year, if they renewed after October 1, so the renewal date of their premium was October 3rd, shortly FEMA is going to allow them to get a refund back of the difference. They're going to basically wipe out all the claims, okay, until the next claim is filed. So they're going to standardize all the rates. And when they file that next claim, they're going to go back and they're going to look at a 20-year rolling period. Well, in South Carolina, that'll take out all the Hugo claims. And that's where we had a lot of people, Hugo, and then 2015 and 16, we saw a lot of claims. But, that Hugo claim put a lot of people in the severe repetitive loss category list. And so they'll wipe that out, but there will be a repetitive claim factor charge to them once that goes. Deborah has a question here. Why are they charging more 25% for second homes? Because Congress told them to. In the Flood Insurance Reform Act of 2014, Congress put in the law that they would charge more money for second homes because they think people who have second homes have who can afford it. So there's a 25% plus the $250 surcharge. Now remember, a second home would be as if if they're staying there. FEMA defines primary residence. If you stay there 50% or more of the year, that doesn't mean you have to have a driver's license there or voter registration card there. But if you are there more than 50% or more of the year, you can claim it as primary residence for flood insurance. That'll save people some money, but you got to be truthful about it, because when we have a claim, the adjuster is going to look around and see whether or not he thinks you really live there or not. And then he's going to ask you, well, how many days are you here? And you'll say, well, I come every weekend or every other weekend or once a month. Well, that's not 50%. So it's you or your spouse. And there's sometimes we have spouses that live happily apart. So in looking at, let me go back here, one other thing. On the other thing I'm seeing, so for severe repetitive loss, I'm seeing premiums drop from $10,000 down to $2,500. That's a significant difference, and it does affect the way we can market houses for sale now, because the premiums become far more affordable. So we want to make sure that they are, that we're checking these things and that we're looking at them. And going back and asking questions of the insurance agents to get these policies updated, because a house with a $2,500 premium will sell far quicker than a house with a $10,000 premium. I looked at one today and the rates were about $7,500 for non-primary structure that was close to the coast. When I applied risk rating 2.0, I only saved about $150. But again, it's non-primary, secondary home, and she was happy to save the $150. One of the other things we're seeing is the preferred risk policy was a cheap policy. FEMA advertised on TV, you can get coverage for $120 a year, and it was a super cheap premium. That is changing. A third of the claims that FEMA had were in zones X, and thanks to Texas and Houston area, and they've changed the way they look at zone X. So now they're really looking at some other factors, and those premiums that used to be $600 could be higher. I have seen one that's on Lake Murray here in South Carolina that came back at $1,300. And another one that came back at $5,600 in Kentucky. So it was, even though it's in an X zone, the perceived risk is much greater than what it was perceived under the old program, the legacy program. So just because it's in zone X doesn't mean that the flood insurance will be cheap anymore. So you really have to ask those questions if people perceive there's a risk for flooding. But that's some of the biggest changes we're seeing. Realtor.com. Realtor.com is a great resource. They just recently come out and said that they're going to stop posting, crime in the neighborhoods. I got to tell you something. I've looked at, they put on there the flood risk factor. That's a great marketing tool, but I have to tell you, it is not guaranteed. It is an approximation. You should never, ever use that information as a basis for a source of information for your listings. It's really for consumer, for awareness, but it is not the definitive source for flood insurance. This is a preliminary map comparison tool. You know, we've gone through, you know, risk rating 2.0. There is a way for you to look at current flood maps and compare it to the old flood map. When we have preliminary maps out, now that the maps are out in Horry County, this doesn't apply any longer. But you know, this is a good resource tool for us as we go through the map changes with other communities. How do you request the claims data? You know, how do you know if the homeowner is telling the truth? It's interesting. You know, I had one this week where the realtor said, look, I don't know what to do, because I went back and I'm looking at the seller's disclosure now, and I've pulled the other prior disclosures, and on, you know, the house where, you know, that's on the market now says it has no prior flood claims, but I'm pulling the prior disclosures and it's saying they do. So really the only way to tell definitively as far as if they had a flood insurance policy and if they made a flood insurance claim, the property owner who owns the house must call FEMA or email them and ask if there have been any prior claims on this property, and to provide a list of those claims and the amounts. And that information can be released to the property owner only because of privacy reasons. But you can have your seller obtain that data for any potential buyers. And it takes about a week, so it's not something that you can get done in 24 hours. They have to get something signed and sent back. So it takes a little bit of time, but you can do it. Let's talk about a little about private flood. Private flood insurance is great alternative to FEMA. Unfortunately, FEMA, FHA has not allowed private flood to be recognized. And there is FHA's in rulemaking on this, started about a year ago, but they have not finalized the rules that would allow a private flood insurance policy to substitute for the NFIP. So stay tuned for that. And I guess with this, I'm going to ask if there's any questions. This is my contact information here. Do we have any questions that anybody has? Feel free to chime in.
Hey, Lisa, I'm seeing a couple questions in the chat.
Okay, let me pull the chat up here. Okay, what do we got? All right, so the first floor height is measured from the ground. We addressed that one. I thought X zone does not require flood insurance. It does not require flood insurance, but some homeowners want to have it, or the lenders are now starting to look at it. And if it's close or to the house, they're starting to require it. So sometimes we need the flood insurance policy to get through loan closing. Yeah, but we can still do the letters of map amendment, but the letters of map amendment will no longer impact the cost of the flood insurance. It's just whether or not it's required. Got a question here. It says Aaron says, if we're representing a buyer in the transaction, the only option we have is to rely on the seller to provide this information and hope it's accurate. That is true. And so what I would do is just verify, with the seller's representative, ask questions, ask them to provide a copy of the claims. You can ask them to provide a copy of that claims history, verifying that there have been no prior claims to validate their the information on the disclosure form. But again, you can only require, rely on what the disclosure says. But again, if the buyer has additional questions, you can make your offer contingent upon getting that claims data from FEMA. This is being recorded, and I will post the link for the compare the old versus new. Now that will not work with Horry County. Once the maps go effective, it does not work. Can you change the rate by raising the house? Yes, you can. Because we're looking at ground to first floor height now under the new system. So yes, you can change the rate by raising the house. I would calculate what that is prior to doing it, because you want to make sure that there's a cost benefit there. How can we determine whether our clients need flood insurance if the zones are not the zones are not the only determiner? They are for whether or not flood insurance is required. It's just not determined. The zones are not a factor in the rating anymore. Are there different types of insurance for a home going to be built on Edisto River in Colleton County? There is building under construction coverage that we would need the plans and the plat, where it's going to be on the property. But the under risk rating 2.0, we're very tied to latitude and longitude. So we really need to know where the building's going to be built on the property. So we need a site survey and the plans that would show the front and rear views of the building, so we can see the foundation. Can you bring in dirt or lessen the distance from the ground to the first floor? That's an interesting question. We're all still trying to figure out what the factors that vary. The rating system's not going to recognize the dirt on that floor unless there's a map revision done that would show the fill being placed. So it's going to be interesting, depending upon what your goal is. If your goal is to reduce the rate, maybe not. What seems to reduce the rate is going to be piles. So I'm not sure that that's going to reduce the rate. If you're looking at bringing in dirt to get it out of the flood hazard area so you don't have to buy flood insurance, maybe. But again, there are some other factors that go into that. And so another one asked about elevators included. Are elevators included in insured and raised homes? Yes, they are. And as a matter of fact, if you build the elevator in the center of the house, which everybody likes to do, they are covered. But the interesting thing is if you build the elevator on the outside of the house, so you come up and you come up on the patio or the deck, that elevator could actually be insured as a separate structure. I had a client, Carolyn says, I had a client that was 2 inches to get out of the flood insurance. Yes, 2 inches, it makes a big difference. You've got to have that lowest floor to the nearest 1/10 of a foot out of being, out of there. Please provide a website to get accurate information to determine if flood insurance is required. You need to go to the MAP Service Center. FEMA's MAP Service Center is the one who, that's the definitive answer on it. You go back here and I'll share that slide with you. MAP Service Center. Right there, that's the address for the FEMA maps. And that's how you do it. Make a format. You can take a picture of it, basically using the screenshot for FEMA on their website, put an 8.5 by 11, map in your file so you'll have it. Has the 1% of X-zone properties reduced greatly? Has the percent of X-zone properties reduced greatly? Under the impression every zone would have to pay some sort of premium. So the X-zone properties have not coverage for, are people renewing X-zone policies? Not at the rate they were buying them. So we are seeing some, drop off in X-zone policies. That's partially due to the economy right now. So we're kind of struggling with what to do with them, because I got to tell you, I had a lady who had an X-zone policy and she was paying $250. And when I quoted it this week, it was 600 and some. She's like, it tripled. Why? And I said, because you let the policy lapse. So, interesting thing that you have is that people think, well, I've paid off my mortgage. I no longer need flood insurance, so I'm going to drop it. Those are the people who are going to get the biggest wake-up call, because when they drop that coverage, they come back as new business. And that new business policy is going to be nowhere near as cheap as the prior insurance was. Somebody says, it's my understanding if you have 3 or more claims, you're no longer can get coverage. That's not true. The NFIP will ensure no matter how many claims you have. Aaron writes, many new construction builders are no longer providing elevation certificates for homes since the homes are no longer required as factor in the premium, but you mentioned it could help. So for builders still have to meet the floodplain management regulations. And the floodplain management regulations say that the elevation certificate has to be submitted to the building department. So the building department still has to collect those elevation certificates and keep them on file. So there should still be a record of that elevation certificate on file with the building code jurisdiction office. But an elevation certificate really, even though it's not required, in most cases it helps. It doesn't hurt to have one. It's not going to be used against them. James says, my understanding of a claim paid is 2 of the neighboring 5 homes must flood. Is that correct? That is incorrect. It's 2 or more properties, which could be the road and your house, or it could be 2 or more acres. So, and it has to be unintentional flooding. So, for example, if your neighbor has an above ground swimming pool and that pool collapses and floods your house, that is a flood and payable by your flood insurance policy, not your homeowner's policy. And a lot of people think about floods, they think about oceans and rivers, but they don't think about things like stormwater runoff. They don't think about the neighbor's above ground swimming pool collapsing, but that is a flood and your homeowner's policy will not pay. We have any more questions? Man, this is some really good discussion. All right, well, I want to thank you guys. I'm going to put my contact information up here once again. These slides will be available for you to go back and look at. The video, we have a video that's going to be available as well. If you have any questions whatsoever, please feel free to bring them to me. You can reach me at 803-865-4297 or Lisa at simplyflood.com. It's been my pleasure to present to you today, and I look forward to working with you in the future. Michael, do you have anything you want to add?
No, thanks for joining us. And if you guys are looking for the recording, it will be posted on our YouTube channel at youtube.com/screaltors. And that should be up later this afternoon. So
yeah, I think we got one more question here. So it's best not to get homeowners coverage for flooding. Homeowners coverage will not cover flooding. Most of those policies, they have a flood exclusion. So you need to read the fine print and ask questions. And again, please give me a call if you have any questions. Y'all have a nice day. Thank you.